live, go alive, go live, go live, and now go live. And we are. Alrighty. First and foremost, we want to do this. We want to do that, and this, and this. And here we go. All right, so that all being said, let's go down to Darks. Let's take a look at chat. And we got. Hold on a second. We're gonna say hi in a minute. All right, here we go. Who do we got here? Subby. That's an interesting name. And here we go. So we got ready to roll. Yeah. Oh, there we go. And here we go. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks, and those, in my humble opinion, are companies that have consistently increased their dividends to their shareholders for a minimum of 2 decades. That's 20 years. 20 years of consistent profitability. That's what I'm looking for. Companies that are consistently profitable and have weekly options. That way I can get that safe, predictable, consistent 1% per week. So let's see who's joining us tonight. Tonight we have Subby, WNC Mountain STR. I have no idea what that means. Glubby Wubby, Dennis, Araspa 26, cool. Bo's here. Bo, what's happening? Stinger. Pete, Selena, Jay, howdy. Who's that? KK. Kiss the. Alrighty, that's cool. Ray Bones, Tom, Big Luck, Cut It. Okay. Lindarella back again. How are you today? Natural, what's happening? Vidi, Hashem, Labambo. Okay. Patrick, Jack Life, Lindarella, good evening. Michael, Austin, Pete, B-Rad Daddy, Jerry's in the house, Bread. Okay. Scott Hackler, 13. Any news regarding Saturday's training session? I'm very interested. You and a bunch of other people, we're going to do a sample testing probably Wednesday or Thursday night to see how everything flows before we actually bring it live on Saturday. Okay? Raphael, what's happening? Howdy, B-Rad Daddy. Oh, wow. Who else do we got? Run or yep, okay. Chris, Schizo, Nini, Oligold, Bank, Doomsday, 99, Endless Energy, what's happening? Chris, Hudson, Chris, Oliver, Olivia, sorry, Sir Henry, Roland, Chris, CS, Mike, My Deaf Cat. That's an interesting name. Vino, 141 calls. Donovan, how you doing? Servant Garrett, Compounding Cash. Ooh, I like that name, Compounding Cash. Are you a teacher? Endless Energy. You could say that, because I'm here teaching something, so you could say that. Yeah. All right. Caroline, Minecraft is launching soon. Cool. It's not weekly options, but would you please take a look at HEPA? Okay, Chris, why would I look at HEPA if it's going to be a no? Now, I'm pretty simple. I'm straightforward. I'm Gen X. If you're looking for apologies, if you're looking for a safe space, this ain't it. Okay, hope I'm teaching investing cash flow using dividend stocks and weekly stock options. Okay? Simple, safe, predictable, consistent 1% a week. The strategy I'm about to share with you was created for my 9-year-old little daughter. So that being said, let's go take a look at the princess. And for you guys that are new here, haven't seen her before, let's go take a look at JC Lynn. My YouTube channel, it's on my social media. Past that, here we go. Come on. And look at, we got 2 lives going, videos. And we want to go to the oldest videos because this was a long time ago. Look at that, 12 years ago. Okay, here we go, and here she is.
Hi, I'm JC, and me, as you being part of my internet website called Penny, which my dad didn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks and options.
Oops,
Every month you'll be
hit my camera.
or lists of stocks that you can choose from.
Okay, so that's JC a few years ago. What do we have here?
List number 1.
Here's me a few years ago. Look at all the hair. My goodness. No gray.
Every single day you buy different stocks. Every single day there's a different company paying out dividends.
That's my favorite part. Yeah, that was about 15 years ago, and I do laugh every time I see that. We do crazy things for our kids. Just keep her on track, keep her focused. It had to be fun. Okay, so fun, simple, safe, predictable, consistent, all that kind of nice stuff. When she was 9, the video you just saw, she was 11 at that time. So we had been trading for a little bit. And we had just started getting in front of the camera for YouTube. So we did a whole bunch of videos 10, 15 years ago. But, here we are now. It's not a weekly option, but we take a look at HEPA. HEPA. H-E-P-A. You ready? H-E-P-A. Nope. How do you like that? That was quick, wasn't it? I did take a look. I try to be nice to everyone, try to show everyone everything. But here's the thing. You want me to take a look at HEPA. You want me to tell you what I think of it. Well, I have a trading strategy that is simple, direct, right to the point. I don't look at other strategies because I want to stay single-mindedly focused. I'm looking for 50% return per year. And what I've been doing has been working for the past 15 years. So asking me to take a look at something that doesn't fit, I'll take a look. But it's going to be a no, and it's going to be a waste of our time when we can be looking at stuff that is a yes, and that would be something beneficial for more of us. Okay? Now, the strategy is simple, safe, predictable, consistent, 1%. Now, you saw my daughter. Okay, she was just your average, everyday 9-year-old girl at the time. She jumped on my lap, said, "Daddy, can you teach me what you're doing?" I said, "Fine, not a problem." So, coming up with a strategy for a 9-year-old, it had to be simple. "Evening, James. Sweet Jones, what's happening?" Say all that kind of stuff. So I had to come up with 5 rules. 5 rules to keep her on track. Rule number 1, if it's not on the list, it's a no. Okay? If it's not on the list, if you don't understand it, if you don't know a lot about it, if you can't give me details on a stock, then it's a no. Can-Am, how you doing? Rule number 2, never sell at a loss. It defeats the whole purpose of the game. And it is a game. Don't confuse yourself thinking that it's not. It's a game. It has certain rules. Okay? We buy, we sell, we look for opportunities to make money safely. Okay? My number 1 priority is consistency of profitability. Not just for myself, but also for the companies that I invest in. Consistency and profitability. Okay, rule number 3, make sure the company's consistently profitable. TNXP. Paul, what the hell is TNXP? TNXP. It's a hell no. What the hell? Come on, dude. Maya, how you doing? When I say consistently profitable, I mean 20 years of increased profits. Now, why am I talking about profits? Well, because if the company's not profitable, it's going to be a no. Okay? Now, also, along with consistency of profitability, weekly options. This is monthly. This is a no. Why are we looking at it? I don't do crypto. Thank you for that. Now, there's a reason why I don't do crypto until crypto is regulated to some sorts that I can make a consistent weekly profit off of it without having to sit in front of my computer all day. It's going to be a no. Now, here's the thing. A lot of people have a tendency to look over this little minor tidbit of a fact. The stock market's been around for over 420 years. Crypto's been around for what, 20? What are you going to do? Give all your money to a teenager? Hell no. I want someone who's proven themselves worthy of my money. 20 years, bare minimum of consistent profitability. If the stock market's been around for 400 years, and there are stocks, there are companies that are over 200 years old still available to buy shares on. Here in the United States, over 200 years old, and you can still buy shares. Okay? Why would I want to look at something that's, 10, 15 years old? XRP, what is that, 2 years old? Maybe 1.5? Yeah, no thank you. Okay, when you do, when you invest your money, you put it wherever you like, okay? This is my show. I only put my money into something that has consistent profits. That makes perfect sense. I know it makes perfect sense, yet people still ask me to look at stuff like this, AMP. It may be the greatest thing since sliced bread, but I cannot make weekly income without sitting in front of my computer all day long. That's not what I want to do. If I wanted another job, I would continue working for someone else. I don't want another job, okay? I want to do whatever the hell I want to sleep until I'm done. I want to stay up late and not even look at the clock. I want to eat whatever I want. I want to do whatever I want because I have paid my dues. I've been working since 1973. My first job, Old Man Simmons Farm. Tomatoes, cucumbers, green beans, corn, squash, and then we go out into the woods and we do cutting down firewood, loading out the truck. Yeah, right from school. He picked me up right from school, right at the school bus. Good evening, James. Gone fishing. I know the stock doesn't quite meet your criteria, Kraft Heinz. What do you think I should do? Okay, hold on a second. Now, why would you possibly think that Kraft Heinz doesn't fit my criteria? It fits my criteria perfectly. The company's been in business for over 100 years. They've consistently increased their dividend payments to their shareholders for 5 decades. They are what is considered a dividend king. That Kraft Heinz, it fits my it does. Yes. I love Kraft Heinz. Let's take a look at it and see what it looks like. KHC. KHC. Usually when people say it doesn't fit your criteria, but you take a look, no. This one does. Okay, this one, lovely company. All right, so let's quick look. Now, anytime I look at any chart at all, I'm looking for 5 things. 5. You're going to see I do a lot of 5s, okay? A lot of 5s. 5 things I'm looking for. The high, the low, where was it, where is it, and what direction is it going? Down, up, down, up, down, up. Look at this right here. Okay, a yearly low. Here's the low of the year. Now, you're going to hear this all the time. Buy a stock low, sell it high. Buy low, sell high. Never, ever, ever have I heard anyone say, oh, look, it's at the high of the year. Let's buy it and wait for it to go higher. Yeah. No. Sorry. If you want me to look at something, no problem. Just be sure you look at it first. Make sure it's not at the high of the year. Okay? It's just automatically a no. Make sure it has weekly options. You don't know? Take a look at the option chain. 31 January, that's this Friday. 7 February, that's next Friday. 14 February, that's 2 Fridays away. 21 February, 3 Fridays away. 28 February, 4 Fridays away. So on and so forth. Weekly options. If there are no weeks in there and only months, that means it's a monthly option, and that's a no. It's simple. I have 2 criteria. That's it. Okay? Number 1, consistency of profitability. Are they consistently profitable? Now, I want to make sure that the company has over 2 decades of profits. That's 20 years. 20 years consistently profitable. That's one of my criteria. The second criteria, weekly options. Okay? We checked last week. 9,845 different companies that you could invest in at any moment. Okay? That's a lot. However, only about less than 300 have consistent profits and weekly options. Those are the only ones I'm looking at. So let's keep on keeping on. Let's take a look at Kraft Heinz. Here's the high of the year, the low of the year. It's bouncing up right there. This thing almost looked perfect. Almost. Intel. Jamar wants to take a look at Intel. INTC. Okay. We'll take a gander at it. Hold on. Now, if I'm going to buy it here, okay, if I'm going to buy it tomorrow morning, the price I will be buying it at this moment in time, this is what the numbers are. However, when the market is open, all of these numbers and all of those numbers are going to change. Every couple of seconds, a new number. Yeah. So the last trade of the day was $30.20. It's right up here. Okay? The bid, $30.16. The ask, $30.23. If I'm going to buy it tomorrow, I'm paying $30.23. The closest strike price is going to be the $30.50, and it's going for 20 to 24 cents. Now, as much as I like this, very rarely do I ever buy it because the premium is giving me less than 1%. Now, 1% a year is 52%. Simple interest. Compounded is like 72. But I don't compound mine. I actually spend mine to pay my bills. So, if you're okay with 21, okay, 21 cents off of a $30 stock, that's 2/3. Well, 2/3 of a percent, what is that? 60.6, 0.65 or 0.66, something like that, per week. Well, it's still over 26 to 30% per year, if you're okay with it, if you really like Kraft Heinz. Now, don't get me wrong, I like it. It's a good company. However, it's not the right time for me. But let's take a look anyway, because, it is a dividend king. They do deserve a little bit of respect, because 5 decades of consistent profits, well, got to give them some benefit of the doubt. All right. A year ago, we're sitting at $37.29. About a couple months later, $39.02 is the high of the year. I missed that question. James, take a look at NKIL. It stands for... Oh, wonderful. Yeah. It's the high of the year right there. The last 90 days. Now, the reason why I want to look at the last 90 days, well, because a year of time is a little bit too much to get a good idea where it's going. But the last 3 months gives you a better idea. Okay, fine. 5 things. Remember 5? The high, the low, where was it, where is it, what's the direction? Down, up, down, up. Okay, fine. Not bad. That's the 90-day. Now, to see if it's a really good jump, to jump in, I want to look at the last 30 days because I want to have a good idea where is she going to be by next Friday. Doesn't do meme coins. Thank you, crypto. Yep, don't do meme coins. Don't do any kind of cryptocurrency. All right, so here's the last 30 days. It gives you a better idea of where you could expect it to go. Well, 30 days ago, we're at $30.50. The high is 31. Okay, Paul, I see you want to look at SoFi. Paul, when I say, please do me a favor before you suggest anything. Take a look. How often has SoFi increased its dividends? How old are they? Have they been around at least 2 decades and have 20 years of consistent profits? Get back to me once you find out that information. Here's the high right here at 31. That was 3 weeks ago. She drops. Here's the bottom here, 28.50, and then she shoots back up again. Okay, not bad if you're okay with less than 1%. But that's only part of it. Next, I want to show you the seasonality chart. Now, the seasonality chart, well, that gives us an idea of what it normally does this time of year. It just isn't a stupid thing I came up with. Okay. Yep. Front man, thank you for that. So here, far left is January 1st. Far right, December 31st. This is one whole year. Now, the blue line all the way here to the left, that represents the movements this year. Okay, from January 1st to where we are right now, almost at the end of January. Okay, great. But this red line, that represents how has the stock moved predictably every single year. Because stocks move differently in the spring as they do in the summer or as they do in the fall, whatever. But January, December, look what happens right here. Now this is the first quarter. Okay? The first quarter, Kraft comes down. Can you check JNIB? No. Have you checked and see if JNIB has 20 years of dividends and weekly options? Probably not, because I never heard of that one. SoFi, I've already doubled my year to date. Paul, you didn't answer the question. I honestly don't care how much you made off of it. Okay? I honestly don't care. Seriously. I'm a Gen X. We really, honestly don't care. We want what we want it when we want it, and we want straight answers. When I asked you, SoFi, how consistent are they with their increasing profitability? Do they have weekly options? When you have those two answers, get back to me. I don't care how much money you made. Really, I don't. People want consistency, predictability. Okay, I'm 60 years old. I don't want to have to go back to work. I want to make sure where I invest my money, I can get a return every single week. Okay? So, as I was saying, first quarter, Heinz usually goes down. Look at the second quarter. She shoots up nicely. But, well, who would have thought going into the summer? Look, you go into summer. The end of May, that's usually when kids get out of school. That's when summer break usually starts. And look, it just drops, all the way to the end of summer. King, what do you think about Deepak drama? Yeah, don't even bother with it. Okay, for the second quarter, she goes up nicely. Third quarter, she comes down. Fourth quarter, returns to semi, decent. But doesn't make sense for now. Orlando, what's happening in Can-Am over there on YouTube? All right, so that being said, let me just answer these guys over here. All right, so let's highlight this area right here. What can we expect for the next couple of weeks? Well, we're right here. Okay, here's where we are now. Look, it seems to go down a little bit before she retraces. So, although I like the company, it's not giving me 1%, and historically it goes down this time of year. So I'm going to say no to Heinz Ketchup, even though it's a great company. All right, so we're going to go through some of these questions we have here. Let's get rid of this. Let's bring this all the way back over here. There we go. That's where I like it. All right, James, Carlos, Wesley, Logan, Xander. Uh-oh, I missed some questions. I don't like missing questions. Just you dabbled in crypto. No, I don't do crypto at all. Now, guys, please do me a favor. Don't spam. I got some spammers here already. Where are my monitors? I need a new monitor because I can't believe you guys are letting this stuff go unchecked. You are being very unrealistic. Trekkie, you are being very unrealistic. Wow. So, Trekkie, you're new here. With a name like that, I remember. But, I'll take your word for it. But here's the thing. Trekkie, you're new here. Last year. All right, here's my statistic. Okay, here's what I made. Okay, profit and losses right there, year to date. Underneath that, every single trade I made last year is available for your viewing pleasure. So just pick one. Here we go, right here. Ford, Mara, Schlumberger, Intel, Walgreens, Bank of America, Chevron, MPW, Walgreens, Macy's. That's just 1 week. Okay? Let's go over this side. Here's the timestamp. Okay? If you know how to view a trade, Here's the timestamp over here. 8:19, 24, 09, 30, 53 seconds. Okay, so 9:30 a.m., first thing in the morning, that thing filled. Okay, here's all the trades. Here's what it was, the buy and the sell. Okay, the green is buy, red is sell. Tim McCarty, how are you? Okay, how many contracts, how many shares, what the date was, what the stock was, the strike prices, and what the profits were. Okay, if I'm being very unrealistic, I'm pretty sure most of you people can read 162,000, okay, made 3.04%. Okay, so the profit for this 1 week only was 4,900. Okay, you can check it yourself. All the numbers are there. Well, almost all of them. We haven't finished doing all that work. Okay, that's no fun at all. Okay, Intel, Kohl's, Win, Kohl's. Okay, only made, 0.73. So yeah, every once in a while I won't make 1%. But for the most part, if you take a look at the numbers, 0.73, 0.45, 0.6, 0.4, what the hell? 1.07, 0.63, 1.27, 2.9, 1.39, 1.91, 1.72, 7.4, 1.08, 1.4, 4.5. They're all there. You don't take my word for it, fine. Just check the numbers yourself. Alice! Hey, James, question. When you shared Mara the other day on your page, I didn't think that's Marathon. No, it's not. Marathon is M-R-O. Mara, M-A-R-A. Totally different company. What do we need to do? Gregory Coleman, how are you today? Now, Gregory, I'm not quite sure when you say what do we need to do for what. So I'm a little bit lost there. What do I think about Walgreens now the deal is off? Ooh, Alice, that's a good question. So let's take a look at Walgreens. Let's get out of there and put in WBA. WBA. Now, the interesting thing about Walgreens, okay, Walgreens has been around for 170 years. That's a long time. They consistently increase their dividends. There's 8,700 stores worldwide. They actually own physical products that they sell in retail stores all over the world. Okay, as far as I know, the last report I saw, 22,000 stores carry Walgreens products. So I really don't think they're going anywhere. Yes, they had a problem with the last administration because they weren't, prosecuting theft. So they decided to close 25% of their stores. Well, kind of makes sense. If you're losing money, close the damn store. Done and over with. Okay, so let's take a look at Walgreens. Now, I've been trading Walgreens for a very long time. Well, shouldn't say that. Only about 8 or 9 months because it just works. All right, here's the high, 24. Here's the bottom, 8. That's a big drop from 24 down to 8. That's a 75% drop, somewhere in that area. She drops down, then she jumps back up again. Now, Alice, if you're correct, the deal is off. They've actually had a deal pending for someone to buy them out and go private. Okay, fine. But that didn't seem to work. So let's take a look at the numbers. Because right now, right, high, low, where was it? Where is it? Look at the direction. Down, sideways, up. Okay, simple. It's currently at 11.34. So if I buy it tomorrow, which I do own some Walgreens, so let's see what it looks like. 11.44. The 11.50s are going for 19 cents a share. Now, simple math, 19 cents a share is over 1%. But the big question is, do you like Walgreens? Do you like Walgreens at this current price? Are you willing to buy it and hold on to it for however long it takes for it to hit its target? So what is it we don't know about Walgreens? Well, the book value is a hell of a lot higher than this. See the stock price? The book value is higher. Let's take a quick look. Quick look at Walgreens book value. WBA. Now we're over here on Yahoo Finance because you got to find a good a good financial website to do some little research that may not be available on your trading platform. Okay, so the book value right here. The book value for Walgreens is $12.09 per share. Well, the stock's only at 11. Totally different than, let's say, NVIDIA. Because NVIDIA, hold on, let's bring it up real quick. NVDA. Okay. Now, NVIDIA is $140. Oh, sorry, it came down. It's $120. $120 per share. But look at the book value, $1.74. So the company's only worth $1.74 per share. But Walgreens is worth $12 per share. And you get a decent rate of return. All right, anyway, and the dividends for Walgreens is a hell of a lot better than the dividends for NVIDIA. Anyway. Okay, what do you think about Walgreens and the deal is off? Well, I'm always going to look at the basic numbers. What's the stock at now? Where is it going? Where is the river flowing, so to speak? Think of it as a river. It's going, turning, twisting, all that kind of stuff. You don't know what's around the next corner. Okay, great. Well, let's take a good look at it. A year ago, we were at 22.69. The high of the year was about 24, and that was the beginning of February last year. Look at the last 90 days. I'm looking for 5 things, remember? High, low, where was it, where is it, what's the direction? Down, up, down, up, down. Well, what's going on here? Good question. Now, let's zoom in a little closer because I want to look at the last 30 days to get a better idea of what we can expect in the next couple of weeks. All right, so 30 days ago, we're here at 850. Okay, well, the bottom is right there on the 1st of January at $9.07. From there, she shoots up to over 13, pulls back, tries to go up again. But what happened today? So apparently there's bad news today that the deal's off. So she pulled back a little bit. Now we're sitting at 1134. Okay, well, let's see what happens with it. Okay, Specs wants to take a look at Altria. That's M-O, Altria. Now, I do have some Altria also. Ooh, big jump up for Altria today. Well, let's take a gander. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down, up. So it's going up right now after a little bit of pullback from the high of the year. Pull back, now she's going up. All right, well, let's find out. 53.45. So 53.45, we'll be looking at the 54s, and it's going from 50 to 73. That's almost 1%. So you might just be able to squeeze that 1% out of Altria, depending on what she opens up at tomorrow. But let's take a closer look to see if it's the right time to buy Altria. So a year ago, Altria is at $40. Drops all the way down on the end of February at 39. From there, she shoots up nicely the last 90 days. Here we go. Okay. Here's your high, here's your low, here's where it was, here's where it is. Look at this. Up, down, up. Really not that difficult. Jump into the 30 days. 30 days ago today, right there. Okay, it's going to be a no for me this week, only because, look, 30 days ago we're at 52, jumps up, pulls back, here's the bottom at 50, and then shoots up. Now we have a new 30-day high today. Well, today's the 30-day high. I don't buy anything at the 30-day high. When have you heard somebody say, hey, the stock's at the 30-day high, let's buy it and wait for it to go higher? Yeah, I don't do that. Sorry. But I do have some Altria at 50. All right, anyway, let's keep on keeping on. Cool beans. All right, let's do this. Okay, let's get out of there. Let's do this. Lindarella, does LAPD fit your criteria? What does the Los Angeles Police Department got to do with anything? LAPD. Nope. It don't. Trekkie, stocks that are all at all-time highs are considered safe. Okay, Trekkie, I'm kind of curious. WBA. WBA is not at an all-time high. I have no idea what you're talking about. Ford, not at an all-time high. General Motors, not at an all-time high. AT&T, well, that is at a high. Procter & Gamble, not at an all-time high. Home Depot, not at an all-time high. Lowe's, not at an all-time high. Wells Fargo, WFC, not quite an all-time high, but it's high enough. Bank of America, not at an all-time high. So I have no idea what you're talking about. Stocks that are at an all-time high are considered safe. So Trekkie, you're under the impression that I'm buying anything at an all-time high. Hell no. I buy at the right time. Timing for me is all about it, okay? BTC. Well, let me think. BTC, that's Bitcoin. That's not a dividend stock. That's a cryptocurrency. Why the hell would I be interested in that? I have no desire to sit in front of my computer all day long looking for an opportunity. Oh, so Trekkie, you want to literally all macroeconomics. So you like SPY, SPY. I love people like you, really do. SPY. Okay, we want to go to historical data. Okay, so SPY, you like it. It's currently at $5.99. That's, not cheap, but it is, relatively up there. So, Trekkie, just for you, I'm going to show you exactly how wonderful SPY is. So we're going to go over to historical pricing, okay? Now, historical pricing, also known as the data stream, gives me the historical prices for everything I want to see. Well, I want to take a look at the dividends because my idea of safety and predictability is consistency and profitability. So if a dividend, get right here, maximum amount, we want to go as far back as we can. If a dividend is a portion of the profits that the company gives back to the investors, okay? Profits, profitability, dividends, they're kind of like all in the same group. If they're consistently profitable, they will give more and more profits to their investors. So I could take a look at all the quarterly reports and all the annual reports and see how consistently profitable they are there, or I can skip all that crap and go straight to the dividends. Because if a dividend is a portion of the profits, 1%, 0.5%, 3%, whatever it is, it's in the corporate bylaws. It is within the bylaws of the entity, okay? If they are profitable, they're giving this amount, whatever that amount is, back to the investors. So let's take a look at the numbers. Hypothetically speaking, they should increase if the entity is consistently profitable. So if the ETF is consistently profitable, the dividends should go higher and higher and higher, correct? Well, let's just take a gander, okay? Very first one, March 1993. March 1993. 21. Cool. 32. Well, that's up, right? 21 to 32. That's going up. That's what we want to see. But look at the very next one. 21, 32, 29. That's going backwards. So hypothetically speaking, they're not as profitable as they were here and here. Okay, so that's one time going backwards. 32, 27, backwards. 31, 29, backwards. 36, 27, backwards. That's 4 times, and we haven't even gotten through 5 years yet. So let's keep on going. Where are we? Right there. Okay, 27 right there. 32, 31, backwards, that's 5 times. 38, 29, that's 6. 35, 35, 37, 30, that's 7. And we're only at 1996. We haven't even gotten to the 2000 yet. And we're 7 times going backwards. That's 2 steps forward, 1 step back. How can you possibly say that's good? But wait, it gets worse. Really does. Okay, 29, 35, 35, 37, 30, backwards, 1997. 35, 35, 38, 31. That's 8 times going backwards. 35, 36, 39, 32. 9 times going backwards. 41, 37, 10, 35, 11, 37, 35, 12, 38, 41, 32, 13, 35, 37, 39, 33, 14, 35, 38, 44, 35, 14, 36, 40, 52, 40, 17. I'm not even going to bother anymore. Seriously. This thing goes down almost as much time as it goes up. So if your company's consistently profitable, just for the fun of it, I'm going to show you in a minute, but wait, this thing actually gets worse. Trekkie, it actually gets worse. So you're profitable, profitable, not profitable. Profitable, profitable, not profitable. Profitable, not profitable, not profitable, profitable. It makes no sense. When I say consistently profitable, these numbers should get higher and higher and higher and higher because it's a portion of the profits the company gives back to the investors. If it's going backwards, that means that they didn't make as much money this time as they did the time before. Okay? Makes no sense to me. You invest your money the way you want. I will invest in companies that are consistently profitable year after year after year. You are so unrealistic. Yeah, but at least I'm looking at real numbers. This is Yahoo Finance. You don't like this one? Go to Google Finance. Go to CBOE. Go to NYSE. Whatever financial website you want to use. Fine. And look at how consistently profitable are they. Well, if they're consistently profitable, the dividends should go higher. But hold on, it actually gets worse. Believe it or not, Trekkie, it gets worse. And these are not my numbers. I'm not making this shit up. Okay? Spider, ETF, 500, SPY, blah, 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 whatever. Look at the yield. The yield for the year for SPY, 1.21. 1.21. That makes no sense to me whatsoever. You invest whatever you want. 1.21% for the year. Hey, have at it. Okay? What stock is this? SPY. So one more thing, Trekkie. Let's take a look at, back to historical performance. Okay? Back to historical performance. All right. Dividends only. All the dividends you got. Now, let's take a look at Microsoft. MSFT. Microsoft, just for the fun of it. Let's take a look. Let's go back all the dividends. Okay, all the way back to 2003. Okay, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Now, I don't know about you, but every single year that went higher and higher and higher. SPY didn't. It went up, it went down. It went up, it went down. You can argue all you want. You can disagree with me all you want. Numbers don't lie. Okay? If a company is consistently profitable, the dividends will go higher and higher and higher. If it is not consistently profitable, it will not go higher and higher. I don't like SPY. Terribly sorry. There's a lot of stuff that you like that I don't like. Bitcoin, I won't do it. I don't want to sit in front of my computer. I've worked since 1973. That's a long time. I have no desire to punch a time clock for anyone. I've got enough money to last me, well, for however long it lasts me. I'm perfectly healthy, so hopefully nothing bad happens. Won't suck away all my money. But here's the thing. If I'm getting 1% every single week, well, that takes care of all my bills. Right? So I'm terribly sorry you don't like it. Alice, we already looked at Kraft Heinz. Oh, APLD. What the heck is APLD? APLD. Oh, Applied Digital Corporation. $6. All right, well, I'm going to go quickly to Yahoo Finance and see how consistently this thing has APLD. How consistently has this company increased its dividends? Oh, sorry, kiddo. This one has no dividends at all. So that's going to be a no. Was that a good one to get into now? All right, Melissa, I don't actually give advice. Okay, I just take a look at the numbers and I give you my opinion. All right, so far I've seen one or two that actually looked good. Somebody wants me to take a look at Macy's. I love Macy's. It was my number one. Well, I think it was my number 2 profitable stock last year. Let's go back to here and we'll look at Macy's. Ooh, interesting. Macy's. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, sideways, up, down, now up again. Okay, that's the 1 year. Doesn't look that bad. What is it going for tomorrow morning? Tomorrow morning, 15.25. So here's where I have a choice. I can do the 15s or I can do the 15.50s. Okay, so the 15s will go for 41, but I'm losing 25 right off the top, which means it's not going to work. It's going to bring me under 1%. Oh, wait a second. 25 from 41, 6. That's 16. Yeah, so I will get 1% doing the 15s, and it's a safer trade. The 15.50s are going for 15 to 19. So either one of those will work out great, the numbers. But is the chart telling me it's the right time to buy? Well, let's take a gander at it. Okay, a year ago, Macy's was at 1870. The high of the year, 22. Last 90 days, well, again, here we go. The high, the low, where was it? Where is it? Look at the movement. Up, down, up. Well, what happened today? Looks like there's a little bit of a pullback today. Well, let's count it. Let's zoom into that 30-day and see what's going on. Right there. Okay, so here's the last 30 days. Hypothetically speaking, it looks great. 30 days ago it was at 18. That's the high of the 30-day period. Then she drops. 2 weeks ago, she was at 13.50. Well, it went from 13.50 to 15.50. Okay, 13.50 to 15.50. That's a $2 increase. Now, I know a $2 increase doesn't sound like a lot, but a $2 increase on a $13 stock, well, that's close to, 14% maybe? Somewhere in that area, but it's over 10%. Okay? It jumped up. Is it going to be profit-taking starting? Don't know. It could, because it's over 10%. That's a 10% higher increase right there. Could it go higher? Yes, it could. It could also turn around and come back down again. Depends on what you like. Now, I already have some, but jumping in again, it may or may not be a good idea, depending on what happens tomorrow. Tomorrow, is she going to go up again, or is she pulling back? Is profit taking starting now, or is this just an anomaly surrounded by other bad, performances by other stocks? Interesting question. But let's take a look at the seasonality. What does Macy's normally do this time of year? Well, hell no. Look at that. Here's where we are now. Okay? Here's where we are now. The run-up already happened. Now she's going to slowly taper off. Is that guaranteed? No, that's not guaranteed at all. That's just 10 years of average movement. So, over the last 10 years, this time of the year, Macy's has a tendency to go down. So, I would like to get out of my Macy's this week. Okay? So, let's keep on moving. So, Macy's, although it looks interesting, okay, it's just not quite right because everything's not in line. Okay, I do like Macy's. I do have some. What's up, old man? Thanks. Makes me feel better. Anyway, let's keep on going. So what else do we have? Thoughts on Macy's. Is that expiration this week? Ben, yes, it was. Mateo, Lindarella, doesn't pay a dividend. Okay. Cisco, look at this. Coco wants to take a look at Cisco. CSCO. CSCO. I'm going to say no. This week, don't get me wrong, Cisco is on my list of good stocks. But look what happened. Your 30-day high was last Friday. And today, pullback started. Yeah. No. I'm going to keep my eye on it to see what happened here. Because with a big drop like that, last 30 days, here we go. With a big drop like this, it gapped down and continued to go down. There is going to be a bounce going back up again, but it's going to be most likely a short-term play. Well, 4 or 5 days is short-term, right? If I jump in on Tuesday, okay, there will be pullback. How far? Don't know. Can-Am, what's going on? 59.24. So the 59 is going for 85. Let's track that. Yeah, you'll get your 1% there, and you'll get your 1% here. No, you won't. You won't get it on the 60, but you will get it on the 59. But then you have to ask yourself, what's going on here? What was this all about? Was this just follow the leader with everything else going down? I don't know. What program am I using? Melissa, it's not a program. This is actually a trading platform called Thinkorswim with Charles Schwab. Okay, 7-star parallel. I have no idea what that means. Okay. The bookie killer. Blower. Search up WRLD. Nope. Search up WRLD. I have no idea what WRLD is. WRLD. No options. No thank you. Okay. What's the weather like today? I think it was in the low 70s. Wow. Let's keep on looking for a decent stock. ALF. That's Aflac. ALF. AFL. Okay. Interesting. I like Aflac. It is on my list. Here's the high. We've got a triple high, a quadruple high at 115. The bottom down here at 75. Nice move. Pulled back. Now it's jumping back up again. I like to see this little area right there. What's going on? They literally caught a flag. I have no idea what that means. Okay, so let's take a look at Aflac. The numbers, 108, the 109s, 55 to 70. Sorry, the numbers just don't work. Okay, the chart looks great. Here's the high. She pulls back. Profit taken, shoots back up again. Okay, Janara wants to take a look at Intel, INTC. I love Intel. I actually have some. And it's a down day again today, so she's pulling back. Here's your high over here. Here's your low. Okay, sideways down, sideways down, sideways, and we're at 2029. So 2029. The 2042 is where I can buy it for tomorrow, but look at the number. The 2050 is the closest. Ooh, I like LUV. That's Southwest Airlines. We'll take a look at that next. It's currently going at $20.42. Now, the 2050 is going to be the closest, and it's going for 88, which is about 4%. Well, the reason why it's giving 4% because it's in a little bit of a downturn right now. Well, let's take a closer look. Last year, we were at 43.57. You have a double top at 46.79. Okay, 46.79. That was back in the beginning of March. She just drops the last 90 days. Here we go. Look at this. High, low. Where was it? Where is it? What's the direction? Down, down, up, down, up, down, up, down. Yep, it's in a downturn right now. But hold on. Let's take a closer look because how far down is it going to continue to go before she turns around? Okay. 30 days ago, we're at $20.30. Shoots up, pulls back. Here's the bottom right there, just below 19. shoots up, goes from 19 to 22. Well, that's a $3 move. A $3 move on a $19 stock, that's 16, 17% from here to here. Well, yeah, she's coming down now. But how far down is she going to come before she turns around and goes back up? So I do have some intel, and I'd be looking to get intel again probably next week or the week after, depending how far down she comes before she turns around again. So let's see what these guys over here in TikTok are doing. Hopefully they'll be done doing what they're doing. Oh, yeah. All right, I'm going to get rid of some of these guys. They're just being crazy. Candy, good evening. I'm on Fidelity site now, putting a covered call for Nokia. Can I do a strike price the same as a stock price? Well, let's take a look at Nokia first of all. And okay. All right, quickly take a look at Nokia. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up. What's going on here? I really don't know. But let's, jump in a little bit closer. Before we do that, it's going for 457. The 450s are going for 11. Well, that's over 2%. That works for me. 2% a week is over 100% per year. All right, I'm okay with that. So let's continue. A year ago, we were at 383. Okay, we bottomed out in the middle of April at 329. Well, look at the last 90 days. Here we go again. Here's the high, here's the low, here's where it was, here's what it is. Look what's going on. Up, down, up, down. It doesn't look like a good place to jump into at the moment. Let's take a look at the last 30 days. Give me a better idea. Okay, this one really makes no sense. There's too many gaps, in my opinion. Gap, 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 gap. Okay? Down, up, down, up, down, up, down. Yeah, I would wait. Me personally, I can't tell you what to do. I would wait for it to turn around because you got a bottom here. Not the 30-day bottom. 30-day bottom was like 3-4 weeks ago. Okay? Your 30-day top was last Thursday. Okay? And she pulled back 2 days, got a gap here. More than likely that gap will fill, but at what time? Usually when it turns around. See? Lower and lower. Lower high, lower low today. So once she turns around and goes back up, then it might be a good time to jump in. No, I'm not telling you what to do. I'm just saying I wouldn't do it now. But let's take a look at seasonality. What does it normally do this time of year? Normally. I don't know. Now, this is not guaranteed. Okay? This is what it normally does over the last 10-year period. The blue line is this year. The red line is 10 years worth of data. 10 years. If it does the same thing year after year after year, why would I jump into it now? I mean, are you looking to get that right there? That's only like another day or two. Okay, the 27th, 28th, 29th. That doesn't even make it to Friday. Friday's way over here, the 31st. Here's Friday, the 31st. Shoots up, pulls back. Yeah, no, not for me. But if you like it, hey, more power to you. But seasonality does not trump current trend. Well, the current trend, all over the place. No rhythm, no rhyme, no reason, just kind of weird. Sorry, Candy. That's just what it looks like. What about MPW? Okay. Well, let's take a look at MPW. Now, I do have some MPW, and I like MPW. I've been trading that one for months. Only because the numbers just make sense. But look at here. It might be at a 30-day high, which means it's time for it to come back down again. Okay? It's at a 30-day high. Okay, now I bought it months ago. Okay, so yeah, I get a 1%, 2% every single week. So let's see if I can get rid of some of these guys. Yeah, Melissa, I'm seeing that. I can get rid of these guys. Got rid of him. Got rid of him. Sorry, guys. You give me a minute. I got to block a bunch of these accounts because they're getting a little bit crazy with this stupidness. All right. Is MPW consistently profitable? For me, it is. But you have to ask yourself a question. Now, me personally, Jamar, I wouldn't jump into MPW now. Because, see, 30 days ago we're here. She jumps up, pulls back, jumps up again. I would wait another week or two for it to come back down. Now, when I say consistently profitable, I jump in on Mondays, and I'm usually out on Fridays. I'm not looking for a big jump. I'm looking for it to go kind of sideways. All right. Let's keep on going. Where are we? Okay, we already looked up Cisco. Thinkorswim, got that one. What percentage per week profit is the minimum you look for? Okay, Sunday, I look for 1%. How do you calculate this number? Oh, wow. This is going to sound very silly. All right? But let me show you quickly. Hold on, Candy. All right. See these numbers here? 117,000, 100,000, 100,000. So how do I calculate my percentage? Claire. Well, 100,000 multiply 0.01. Oh, that's divided. That's wrong. Multiplied 0.01. There it is. 1% of 100,000 is $1,000 a week. Okay? If it's 180,000, well, 1% is 1,800 a week. You take the decimal point and move it up two places. It's actually that simple. Okay? Clear that. Bring that back down, and let's go back to where we were. All right, so that's how I calculate my 1%. 1%. That's it. You take, all right, here we got another one. All right. $4.62. What is 1% of $4.62? Well, it's 4.5 cents. That's it. You take the decimal point and you move it over two places to the left. 0.046. Okay, if it's $100, it's over two places, it's 1. 1% of $100 is 1. 1% of $400 is 4. Okay, it's actually that easy. Okay, Candy, I missed yesterday because I had to build my watch list. I just found out last night. Oh, okay. Oh, I think I found a good one. XYNS. I'm going to say no now, but I'll take a look at it. XYNS. And the reason why I'm saying no now is because we can't find this symbol. XYNS. Okay. XNYS. Okay. XNYS. That's still a no. Sorry, kiddo. Oh, B-Rad Daddy. Hey, James. Hasn't happened to me yet, but can you go through the limit order for a stock that doesn't get? Sorry, AG. AG? What the heck is AG? First Majestic Silver. Okay, kiddo. It has weekly options. Was way off. Yeah, you were. Okay, AG. Well, let's take a look at how consistently profitable they are. AG. Okay. All right, kiddo, I'm not seeing this at all. Look at the dividends. 2021 is the first time they paid a dividend. It was 1 cent. 1 cent, 1 cent, 1 cent, 1 cent. Yeah, no. Sorry, no profitability whatsoever. None. Big McCoin. Moon. Okay, yeah, whatever. Limit order for existing stock. Oh, hold on a second. Candy. For existing stock. Wow, interesting question. Okay, so I got Foot Locker right here. Going to here. Foot Locker is currently at 12.28. I want to sell the 12s. Sell. There it is. Okay. Sell 10. NU, whatever the stock price is, whatever the stock symbol is. The date, 31 January, that's this coming Friday. The strike price, the call, if it's a call or a put, get the option. The price you're looking to get, limit order for the day. Or you can do limit order, good till cancel for where it fills. Back over here, and let's keep on keeping on. Okay, Ethan Brown, what stocks should we invest in? Ethan, it's going to be up to you to find a group of stocks that you like. There's a couple of rules that I like. Number one, I like it to be consistently profitable. Number two, I like weekly options because I'm looking for weekly cash flow, and I have no desire to sit in front of my computer all day. When I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. The 10-Minute Trader. I don't want to be sitting in front of my computer for more than 10 to 15 minutes. It's not that difficult. It's simple. It's easy. It was created for a 9-year-old. Okay? So you got to find companies that you like. Now, I like the Dividend Kings. 5 decades of increased profitability. The Dividend Aristocrats. 25 years of increased profitability. I believe there's 67 of them. Then you have the Dividend Champions. This is about 150 that are consistently profitable for more than 25 consecutive years. And then you have to sift through the Dividend Contenders. Now, the Dividend Contenders is about 300 that have consistently increased from 10 years to 24 years. That means they haven't quite made it to the Champions list. They haven't made it to the Aristocrats list. And they got a ways to go to get to the Kings list. Candy UWMC. Candy, you're new here, Candy, so I'm going to cut you some slack. But UWMC is going to be a no. Okay? UWM Holdings Corporation. Hey, Doc, what are you doing over there? Now, it has, an interesting price, interesting move. It has the weekly options, but how consistently profitable are they? Well, let's go take a look at Yahoo Finance and put in what was it again? UWMC. UWMC. Okay, same thing. This thing's only like 3 or 4 years old. 2021 was the first dividend. And it's 10 cents, 10 cents, 10 cents, 10 cents. It hasn't increased in profitability since its inception. It's going to be a no. Okay, it's not that difficult to find out what companies are consistently profitable. You could go to the CBOE website and look at all the companies that have weekly options. Can you slightly move the camera to the left? We can't see the whole screen. Oh, I gotta push this thing back. Push this thing back. I might have to move that a little bit. All right, here we go. Here we go. Doc Sinclair, Cuban, 50 ounce. Okay. All right, let's keep on looking. Okay, now move the camera. Just did that. I can only see about 15% of the screen. Really? Okay, you know what, Chuck? This screen here, okay, behind me, is live on YouTube. So you can go to YouTube, the10minutetrader.com. You'll see 2 lives. One, me standing in front of the screen. The second live is just the screen alone with me in the tiny little corner down the bottom. Day trader, nice dip. Okay. Can't see the entire screen. I still have my eye on AA. Well, let's take a look at AA. Isn't that Alcoa? It is Alcoa. Ooh, she's dipping. She's a dipping. Take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Down, up, down, up, down, up, down. Just missed it. Hold on. Let's take a closer look. But before we do, 34.97. Well, we were looking at the 35s, and it's going for 77. That's over 2%. The numbers look good, but what's the chart telling us? A year ago, it's at 30.70. The bottom of the year was at the end of February at 25.25. Shoots up, pulls back, shoots up, pulls back. Last 90 days, same thing. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up, down. Well, she's currently coming down now. But look at where she is. This is almost the low of the year. Now, Alcoa has been in business for, I believe, close to 100 years. Nice company. So what's going on? Don't know. But then now they're here. They're almost at a new bottom of the year. Well, that's a great time to buy. Buy at the bottom, wait for it to go up. Because stocks do the same thing all the time. They go up, they go down. They go up, they go down. There's a bottom of the year and there's a top of the year. Doesn't mean that's the lowest it's ever been. Doesn't mean that's the highest it's ever been. That just means that's the high of the 90-day time frame. This is the low of the 90-day time frame because we're looking at the last 90 days. Well, now we're going to zoom in to the last 30 days to see what it looks like then. Okay, so here's the last 30 days. 30 days ago, we're at 38. We bottomed out at 34. Okay, and we shoot up to 40. Then we pull back to 34.97. Okay, so here's the bottom. Shoots up, pulls back. There's a gap down here and a gap down here. So usually gaps have a tendency to fill. So as soon as this thing turns around, it might be a good time to jump in. Well, look at the 35.50s. 50 cents. That's over 1%. So I like AA, Alcoa. I'm going to write it down for next week. I'm writing it down for next week because as soon as it finds the bottom and turns around, well, Alcoa's been around long enough. Okay, so I want to keep my eye on Alcoa for next week. Is it time to sell a put on VST? Walrus. What the heck is VST? VST. Vista Corp. Wow. VST. How consistently profitable is this company? 2016. Wait a second. Hold on. The first dividends in 2016. There's nothing in 18. Nothing in 17. So this thing doesn't have that many years of increased dividends. So from 2019, that's only 6 years. Why are we looking at a company that only has 6 years of profits? 13, 14, 15, 17, 18, 19, 20, 21, 22. Well, they're consistently profitable for the last 6 years. But it's only a 6-year-old company. Now, you're talking about selling puts on that. Why? What are you looking for? I mean, take a look. The high of the year is here. The bottom of the year is here. $40 to 200. Now, from 40 to 200, look at it. Okay, 40 to 80, that's 100. That's 200. That's 300. That's a 400% increase from a year ago. That's a nice move. Yeah, this is not something I jump into. Me personally, it's only 6 years old, number one. Number two, that's a big-ass drop. Okay? It's your last 30 days. 30 days ago it was at 140. Jumps up to 200, big drop down to 137. Why? I mean, that's a valid question. Why did it go from here down to there? That's not your typical profit taking. That was done by the market maker. Okay, the market maker, the close last Friday was right around the 190, 192 area. But then the market maker opens it up down here. Why? Something had to have happened. Well, for me, I like 20 years of increased profits. This only has 6 years. Okay, they're consistently profitable for 6 years. But what went on? Why did it jump? Why did it drop like that? And definitely, in my humble opinion, not time to sell a put. But just my opinion, though. What do I know? NJT. What the heck is BITW? BITW. No options, no thank you. Sorry about that. Osman Khalid. Tesla, no. No dividends, no thank you. Ooh, user 571. IEP. Candy, what is IEP? IEP. Icon Enterprises. Call Icon. Okay. Now, it looks like a perfect opportunity. Here's your high, drops down, jumping up. Now it's at $10. Well, the $10 is going for 20 cents. That's a 2% return. But here's the thing. Let's take a look at the dividends, and you're not going to be happy when you see them. IEP. You figure with somebody like Carl Icahn at the helm, you'd have a better rate of return. Okay, so it goes all the way back to 1993. Okay, Ryan wants to take a look at Albemarle. ALB. That's a good company. Now, we still got to look at Southwest Airlines, and then we'll look at Albemarle. Okay, so hold tight for a bit. All right. Take a look at these dividends. 1993. 12. And then they have nothing. 94, 95, 96, 97, 98, 99, 2000, 2001, 2002, 2003, 2004. 11 years. First dividend, 1993. Okay, 12, 12, 12. Nothing for 10 years. And then they start dividends again. Okay, 10 for 05, 06, 07, went to 15. Then it went to 24. Now 08, it's at 24. 09, it's at 24. It's 2 years in a row. 2010, 24. 2011, 24. 4 years in a row, no increase in dividends. So that means 4 years, they didn't make more money. It's just the same old for 4 years. Yeah, no. But wait, kind of gets worse. See, goes from 24 to 49, then goes to 10. Then in 2013, it jumps to $1. Great. That's 2013. Then it went to 125, 150, stayed at 150 for a while. Jumped to 175, jumped to $2, stayed at $2 for quite a while. Then it dropped in half, and then it dropped in half again. No consistency whatsoever. None. No consistency whatsoever. Terribly sorry. I don't like not consistency. George, what are my thoughts on FL, Foot Locker? Ooh, we'll take a look at Foot Locker in a little bit. Thanks for stopping by. We will take a gander at it. Right now, we weren't... Usman Khalid, Tesla. Yeah, no. Waste Management. Whoops, we want to get out of this. And then we want to put Waste Management. Now, Waste Management, unfortunately, monthly options. Okay, now think of it this way. A monthly option, you can trade it once a month. Well, once a month only comes to 12 times a year. Now, if I'm getting 1 to 2% with each option trade that I do, because I'm a seller and not a buyer, okay, the reason why I sell and not buy, 80% of all options expire worthless. So why would I want to buy them if I'm in the 20% minority? Yeah, no thanks. I'd prefer to be in the 80% majority. Okay, so I want to sell. I don't want to buy. So if I'm getting 1 or 2%, that means I'm getting 12 to 24% per year. Okay, Roy wants to take a look at Halliburton. I'll write it down. HAL. Good company on my list, and I do have some Halliburton. All right, so let's keep on keeping on. Vulcan Materials, VMC. I never heard of them. VMC. Yeah, no. Sorry. Vulcan Materials is a monthly optional stock. The numbers just don't work. Alice, USB. US Bank Corp. That is on my list, believe it or not. Okay, we'll get to that in a second. What am I doing? Okay, US Bank Corp. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down, up. Okay, fine, looks good. Now, let's zoom in a little bit closer. A year ago, 42.72. Bottomed out for the year in the mid-June. From there, from 90 days, here we go, 90 days, same thing, look. High, low, where was it, where is it? Look at the movement. Up, down, up, down, up. Okay, well, let's get a little tighter. Look at those 30 days. Wait a minute, before I do, 49.55, the 49.50 is going for 40 to 66. So you might get your 1% out of that one. Might. Well, let's take a gander. Let's keep on going. Last 30 days, right there. So take a look at the last 30 days. What do you think? Doesn't look that good, does it? 30 days ago, we're at 49. Drops, back up, back down, shoots way up, pulls back, back up again. Yeah. It could keep going, because here's your bottom here. Up, back, now it's going up again. Okay, you could get your 1%. But let's take a look. What does it normally do this time of year? Normally. Well, here's where we are now. Okay. The last week of January. Now, last week of January to the third week of February. Nice upward trends. Yeah, you could probably get 1 or 2 weeks out of this before you get the big drop. So maybe 1 week or 2 weeks, then jump out. So that's when you want to take a good close look at what options you're getting into. So if I buy at the current price, $49.55, well, the $49.50 is going to give me just at 1%. The 49 will give me about 1% also, but it's a safer trade. The deeper into the money you get, the safer the trade, the lower the rate of return, but you have to balance it out. Do you want safety or do you want high rates of return? Candy, Vail. Candy, you're throwing on a bunch of them, aren't you? Okay, we got a few more to look at before. Okay, it's only 10:31. We got another hour to go, so let's see what we can do. Now, for the last 15 to 20 minutes, I just answer questions because there's a lot of questions here. I got 80 new questions. I will get to every single question, so please don't repeat them. Okay, I will get to them. It might take a little while. You're done for now? Okay. That's the last one you want to look at, Vail. I'm pretty sure Vail's going to be a no, kiddo. Oh, wait a second. We're still on USB. So you got to ask yourself, does USB really make sense? Okay? Look at the movement. It's kind of like all over the place. Is it going to go up? Well, this counts as an anomaly. Okay, she jumped up and pulled back down again. What happened there? Didn't stay there long. Can you really count it? The gap up, gap down. No. So I wouldn't do it because it's not towards the low. It's closer to the high. But that's me. I'm not telling you to do it. I'm not telling you not to do it. So day trader. Yeah, Tesla is super volatile. I don't do Tesla only because it doesn't have consistent profitability. Doesn't have any dividends. Day trader, you love SPY, SPY. Okay, you weren't here earlier when I went and I took a look at SPY. Okay, do yourself a favor. Before you spend $599 per share in SPY, take a look at the consistency of profitability. How often have they increased their dividends to the shareholders? And then take a look at the yield that you are getting. SPY has a 1.2% yield. 1.2% yield. And that's not for the week, not for the month, not for the quarter. That's for the whole year. Okay? You can get a CD at a local bank that will give you a better rate of return than currently the SPY will. Doesn't make sense. But I don't tell people what to do. I'm just saying I wouldn't touch it because the numbers look crappy to me. All right, so let's keep on going. What we're looking at next. Oh, next. LUV, which is Southwest Airlines. LUV. Southwest Airlines. Okay, interesting. The high, the low, where was it? Where is it? Look, up, down, up, down. What's happening here? We want to take a closer look. It looks interesting. 32.90. So we look at the 33. The 33 is going for 64 to 147. That's over 2%. That sounds good. Well, let's take a closer look. A year ago, $30. Jumps up to 35, drops down to the low of the year in the beginning of August, 23.58. But look at the run-up since August. From August to 23, she shoots up to 36. So 23 to 36 is $13, which is over a 50% increase from here to here. But then she pulled back. We're sitting here now. Okay, fine. Well, it looks the last 30 days. Now look at that. Almost a perfect opportunity. Almost. Let's just walk through it for a second. 30 days ago, we're at 34. Okay, we jumped up to 34.50. Pull all the way down to 31. Back up, back down. Now here's the bottom here, but here's another bottom. So we are slightly going up with Southwest Airlines. Sorry. All right. That being said, it looks like I would get my numbers. So for the fun of it, let's do one. We haven't done one tonight, so let's do a covered call so you can see how the mechanics work. Now, I said I like Southwest Airlines, 32.58. Okay, the bid is 32.19, 32.90. All right, so I'm going to do the 33s because they look interesting. All right, so let's get rid of this. Let's change this from single to covered stock. Okay, 32.90, that's the current price. See it right there? 32.90, current price. Do the 33s, be right there. The 33s right here, and I want to buy it. Then I want to do just one contract. I have it preset for 10, but I want to show you guys just one. So that way you know one contract will give me this. Two contracts will give me twice that, so on and so forth. But just one makes it easier. Now I'm going to do it by market order, and there's a reason why I want to do market order. Okay. Now, a market order is different than a limit order. A limit order, you're telling the broker, this is what I want to pay and no more. Or this is what I want to sell it for and no less. That's called a limit order. Okay, a market order is, I'll take whatever you give me. Well, why do I want to do that when I'm entering? Because when I'm entering a covered call, I'm doing the stock and the option at the exact same time. So they're tied together. Now, when you hear me say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. I'm looking for a simple, safe, predictable, and consistent 1% per week. Well, predictable means I already know what I'm going to make on this trade before I make it. Most people just buy a stock and hope it goes up. And they wait for it to go up. Well, here, I know what I'm making before I do it. So if I'm jumping in on Monday, I know exactly what I'm going to make. Well, close to exactly what I'm going to make before Friday. I already know that. That's predictable. Consistent, well, I can do it every single week because it has weekly options. Safe, well, it's one of the safest trading strategies there is. You're buying the stock and you're selling the rights to someone else at a certain price by a certain date. The one I'm looking at is 31 January, this Friday. Pick a date you want to go by. Now, you can do 1 week, which is 31 January. You could do 2 weeks, which is 7 February. 3 weeks would be 21 February, 14 February. Whatever. Okay? So, that being said, let's walk through it. So, I'm going to buy 100 shares, sell 1 covered call. Okay? Now, let's hit the confirm and send. Here's the order. Okay, you ready? Buy 1 covered LUV, that's Southwest Airlines 100s. That is the weeklies, because there's the difference between the weeklies and the monthlies. Weekly, I can do every week. Monthlies, I can only do once a month. The numbers just don't work for monthlies. I don't do them. All right? 31 January 25. Well, that's this coming Friday. That's the expiration date. So whoever buys this from me, they have the right to do whatever they want. Buy it, don't buy it. Any time between when they pay for it, most likely tomorrow morning, and before it expires, 31 January, this Friday at 4 o'clock. The 33 call, which is the call option, call stock option against the LUV stock at the market to open. That's the order. All right. I always tell people, read it out loud so you can hear it. Most of the time, people lose money by hitting the wrong button and not reading it. Because by reading it, your eyes and fingers can play tricks on you. By hearing it, well, then you get 3, your eyes, your fingers, and never mind. Anyway, the first line you see is going to be the stock break-even price. Basically, what that means, it says 31.52. If on Friday the stock is above 31.52, I will be in profit. My break even. Okay? Well, the stock's currently at 32.58. 31.52 is a lot less. So if the stock goes up, I'm good. If the stock stays the exact same, I'm good. If the stock goes down, well, it can go down as far as 31.52, which is my break even. But here's the thing. When you buy the stock, make sure you like the company. Because if she goes down, and they do go down, they go up and they go down, that's all they do. If and when it goes down, you still get a company that you like and that consistently increases its profits and pays you a dividend every 90 days. But here's the thing. If you miss the target, you still get to collect this money. And then, if it doesn't hit the target, well, you get to do it again next week. If it doesn't hit the target then, you get to do it the next week. If it doesn't hit the target then, you get to continually do it every single week. So this is why I say, make sure before you buy anything, you understand it and you're okay with it. And you don't mind holding on to it because you just might have to. The longest I've ever held anything is 9 months. And that wasn't because I wanted to. Yeah, Candy. Thank you. All right. But if you like, Candy, only if you like Southwest Airlines. All right, so let's keep on going. The next line down is the maximum profit. When I say I want consistency and predictability, well, I already know what I'm going to make because it's right there. $147.50 per contract. If I buy 100 shares, great. I'm paying this and I'm collecting that. Now, I collect it every week. Wonderful. 1 or 2% every week. That works for me. Okay, I'm just sharing with you guys because, I got tired of the little guy, people like me getting shit on. So, that being said, profit, 147.50. So let's bring up the calculator to find out exactly what that is. Okay, 147.50. That's the profit. Now, I'm going to divide the profit by my investment. Well, what is it costing me to do this trade? $3,153. $3,153 and 16 cents. So what kind of rate of return is that? 4.6. Well, that's crazy. 4.6 for 1 week? Well, that's nuts. But here's the thing. Okay? You could do this every single week with this company because this company has weekly options. And that's why I like weekly options. I can get a paycheck every week on my investments. And how much does it take? It takes 10 to 15 minutes every day. If you don't have 10 to 15 minutes every day, I can't help you out. Okay? You have to have some kind of skin in the game. You have to do something. Unless, and there's nothing wrong with this, you want to give your money to a money manager or an investment banker and let them do it for you. But I can almost guarantee they do not have as much interest in your money as you do. So take responsibility for your own money, invest it yourself, do what you think is right for you, because we're all different. Alrighty, Code Monkey. I'm so sorry. That capitalization isn't what it should be. Okay, in your opinion. Okay. So. Okay. Alrighty. Oh, I got that one. DB Rob, thank you. 5th share, got it. Love it. Or they getting greedy. Okay. The maths. Alrighty. Well, let's keep on. Holy cow, I got 100 questions to go. XRP is where I'm at right now. All right, Coach Carter. I can almost guarantee with 100% certainty XRP is not 20 years old. They don't have consistent profitability. For me, I'll see it in 18, 19, 20 years when they do have 20 years of consistent profitability. See, I don't know about you, but I'm a lazy trader. I want safety, I want consistency of profitability, and I don't want to sit in front of my computer all day. Okay? Ugh, you see now. Cool beans. Alejandro, thank you. Chicken Little, VOO. Seriously, you do not want me to take a look at that one. Oh, Dr. Rob. Dr. Rob, that's LUV, which is Southwest Airlines. Okay, do you like Southwest Airlines? I missed some questions. I have to go back, sorry. All right, here we go. Ooh, Polka Wolf wants to take a look at Coca-Cola. I don't know why. Coca-Cola's been in business for over 100 some odd years. I get all the way back to the beginning. All the way back to the beginning. Here we are. Now, let's put in Coca-Cola. KO, Coca-Cola. Coca-Cola, I don't think I may have bought it maybe once or twice in the last 20 years. Let me tell you why. Now, here's the high, here's the low, here's where it was, here's where it is. Look at this. Sideways, down, up, down, sideways. We're at 63.87. Okay, 63.87. So we'll be looking at the 64s. 44 cents to 54 cents. You're not getting 1%. That's why I hardly ever, maybe twice in 20 years, have I bought Coca-Cola. Almost never gives 1%. Osman Khalid, Amazon, no. What formula to figure out profits? Formula to figure out profits. Oh, you take the profit and you divide it by how much money it took you to get into that position. Okay, so when you do a covered call, you know what your profit's going to be before you do it. So you take that number and you divide it by what it cost you to do that trade. And that should give you the rate of return. Jamie, which stock is this? I just joined. That was Coca-Cola, and it's a no. Okay, Big Taz, NVDS. NVDS. No. Sorry, NVDS. Monthly options. See that? February, March, June, September, January. Yeah, that's not weeks. Those are months. Monthly options mean you can do it once per month. Once per month comes to what? 12 to 24% per year? Why do you think that's good? I prefer 50% to 100%. And what is your criteria for profit? 1%. Do you calculate per week or per year? Sunday, 1% per week. That's over 50% per year. Okay, Polka Wolf, we already did Coca-Cola. Miss your taps. You got to ask yourself, do you feel lucky? Do you feel lucky, punk? Do you? Okay. Well, do you? Yep. Alphabet, hell no. Okay, milk steak number 1, Alphabet, they don't have 20, they got 2 years. 2 years of dividends, that's it. What are your favorites this week? Well, that would be Macy's, Walgreens, Nordstrom's, Kohl's. U.S. Steel, not so much. Ooh, MPW, that was a good one too. Riley. Oh, look at this. World You Want to Live In Girl is back. Yay! A&D. What the heck is A&D? A&D. Has no options. That's a no. British Petroleum. Andrea, BP, British Petroleum. Love me some British Petroleum. Look at that. The high, the low, where was it? Where is it? Look at the movements. Up, down, up. Ooh, that could be good, Andrea. Let's take a gander. Currently, it's at 31.45. I can buy it at 31.47. The 31.50s are going for 35. That's over 1%. That works. British Petroleum. That works. Let's take a look at it. Lindarell, we'll take a look at Harley Davidson in a little bit. Let's take a gander at this. A year ago, we're at 35.61. Way over there. Okay, and then she shoots up. The high of the year, 40.47. The last 90 days. Here we go. Here's your high. Here's your low. Here's where it was. Here's where it is. Look at this. Down, up, sideways. So what's going on here? Take a closer look at that and see what it looks like. Dr. Rob, thank you for that. Last 30 days. Okay, 30 days ago, here's our bottom right there. 28.77. She shoots up, pulls back, shoots up again, comes out, and goes sideways. I don't know. Let's take a look at the seasonality. What does this normally do this time of year? Well, for that, we go to the seasonality chart right here. All right, well, here's where we are right now. It don't look that pretty. Here's where we are. Looks like she could jump up in a day or so, bottom out at the beginning of February, shoot up in the middle of February, and then come down the middle of March. You might get a week or two out of it if you're lucky. Might. Okay. How about Harley Davidson? Now, I do have some Harley Davidson. I have more Harley Davidson than I probably should have, but I have some. High, low, where was it? Where is it? Look at the movement. Up, down, up, down. Yeah, not that great. Now, it was great when I first jumped in. It was giving me some nice premiums for the first 3 weeks. Then they just kind of dried up. All right, so 28.42. We look at the 29s. The 29s go from 25 to 35. Well, you can get your 1% out of that one. So let's take a gander. A year ago, we're at 34.25. We jump all the way up to 44, and that was in March. From there, our last 90 days, okay, high and low, where was it, where is it? Look at this, sideways, up, down, where are we now? Okay, looks interesting. Let's zoom into the last 30 days, because it gives us a better idea of what we're looking at. Well, here's the last 30 days. The high, the low, where was it, where is it, okay? Down, up, down, up, down, up. Okay, great, it doesn't look all that bad. The bottom's down here, the 27 area. Now we're headed up. How far up are we going to go? Definitely not high enough for me to get out, because I'm into this at 35. And look what 35 is. Way up there. Yeah, I'm not going to get out of Harley Davidson for quite a while. But I do get a rate of return every single week on Harley Davidson. And I get a higher dividend every year. So how long am I going to hold on to Harley Davidson? Until it hits my target. Okay, I bought it at 35. Okay, so this week, right now, it's at 28.42. That's where it is right now. More than likely, I will sell the 29.50s or the 30s. Well, it doesn't have 29.50, sorry. I will sell the 30s and pick up 5 or 10 cents per share. It's not a lot, but think about it. There's 52 weeks in a year. So if I pick up 5 or 10 cents per share every single week, well, at the end of the year, I'm going to have a hell of a lot more than those people who just get dividends. All right. Intel, that one. ALB. Albemarle's next. ALB. I think I lost money on Albemarle last year. I think I did. I lost, wait a minute. AEO and Albemarle. I lost money on 2 stocks last year. I think Albemarle was one of them. Anyway. High of the year, 140. Bottom, 72. Okay. Sideways, down, up, down, up, down. Okay. We're right now at 89.48. The 90s are going for 129. That's well over 1%. Okay? Do you like Albemarle? Well, let's take a look. I don't know. It doesn't look like a good time. A year ago, 120.54. The height of the year, 143. The bottom of the year, in the middle of August, 72. Last 90 days, here we go. The high, the low, where was it, where is it? Yeah, she's coming down right now. So it's going to be a no. Ooh, Jamar wants to take a look at Nike. NKE. Hold on. Albemarle's a no. That's a no. That's a no. Halliburton's next. So take a look at the last 30 days. Okay. Here's where it was. She jumps up. Now she's coming down. My concern would be looking for 2 days to the upside. Okay, so here's the bottom here. I want 2 days to the upside before I jump into Albemarle. Now, I like Albemarle. I do. Got your high here. She pulls back. 2 days to the upside. That's when I will jump in. Now, I'm going to write it down so we take a look at it next week. ALB. All right. Vail. Who wanted to take a look at Vail? Vail's usually a no, isn't it? Okay. Does look interesting. V-A-L-E. V-A-L-E in the summertime. Okay, Vail. Oh, yeah, I've seen this one before. 2002. 6, 4, 5, 4, 6, 11. 17, 13, 17, 26, 30, 24. Up, down, all over the place. 24, 33, 19, 38, 58, 59, 44, 41, 14. Oh, hell no. Who came up with this one? When I say make sure, okay, never buy something you don't understand. If you can't look under how this stock is performing, why the hell are you looking at it? Why are you having me look at it? Think about it. If you want to look at a stock, well, great. You look at, if it looks good, you want my opinion, at least do some of the work. Make sure it's consistently profitable. This one's not. Who came up with that one? All right, next, BP, we did that. We looked at that one. I have BP and keep selling options, but it came down a little bit, and it's reporting earnings next. Well, Andrea, make sure you put your stock price, your what do you call it, your option price, enough so that you don't get called out, but still make a halfway decent profit. I mean, you've been here long enough, you know how to do that, so make sure, that everything is simple, safe, all that kind of nice, neat stuff. AMD, Advanced Micro Devices, no. Ooh, world you want to live in, girl. Kohl's, I like that one. Now, Milk Streak 1. You probably ask me, why did I say no to AMD, Advanced Micro Devices? AMD. Let's take a look at how wonderful they consistently increase their dividends. Because I want to invest in companies that are consistently profitable. So with no dividends in the selected time period, that's going to force me to read 10 or 20 years worth of quarterly reports. How consistently have they increased their profits? And without the dividends, how do I know when the stock is going to move? That's why I always say, no dividends, no thank you. If the company's not willing to share its profits, how am I going to know when they normally move? Because they normally move in conjunction with the dividend or the earnings reports. So let's take a gander at Kohl's. I actually have some Kohl's. High, low, where was it? Where is it? Look at the direction. Sideways, down, then up. Okay, what's going on here? It looks kind of interesting. I'd like to take a look, but before I do, 1355 to 1350 is going from 14 to 33. Okay, that's more than 1%. That works. Let's take a closer look. A year ago, 2853, the high of the year, 2960. That was the beginning of April. Look at the last 90 days. Same thing. High, low, where was it? Where is it? Look what happened here. There's the bottom. She shoots up, but then she pulled back today and Friday. Why? Okay, is that the movement right there? And now it's kind of profit taking? I don't know. We'll take a closer look. All right. So last 30 days, right there. Now this gives you a different view. 30 days ago was the 30-day high. 2 weeks ago was the 30-day bottom. 1, 2, 3, 4, 5, 6. 6 days to the upside before she turned around and starts coming back down again. Well, it goes from 1260 to 14. Okay, 12, 13, 14, $2. That's $2.50 on a $12 stock. That's 20%. From here to here, that's a 20% move. Well, of course there's going to be profit taking. So how much profit taking is there going to be before she turns around again? Think about it. If you're following a stock, okay, whatever stock it is, okay, you see a bottom, okay, she turns around, she moves up. At what point do you plan to get out? Me, I'm just looking for 1% a week, okay? This is 20%. A 20% move. Yeah, I'm out taking profits. You all have got to figure out, if I'm buying something, where's my exit? Because what are you doing? Shooting the moon? You just buy something and hope it goes up? No. I like consistency and predictability. Okay? Consistency every single week. Predictability. I know exactly what I'm going to make before I enter anything. Okay? Consistency, predictability, safety. That's what I'm looking for. Okay? I have no desire to go back to work. What are we down to? 160 people? Cool. Well, let's actually do a trade on Kohl's. Why not? Let's do the 1350s. Because she's at 1350. Okay, let's get rid of this. Let's change this to covered stock. The 1350s right there. Here we go. Just one contract. Market order, so it fills instantaneously first thing tomorrow morning. Okay, buy one covered call of Kohl's. KSS 100, those are the weeklies. 31 Jan, 1850. 1850. How much is it costing me? $1,332. 1,332 and 16 cents. Gives me a grand total of 1.38. Well, 1.38 is over 1%. Okay, 1.3. How much is that for the end of the year? That's got to be at least, I'd say 65. Multiplied by 52. 72%. Damn it, I was close. 65. Anyway, clear that. So 1.3% a week comes to 72% per year. Well, that's not that bad if you think about it. But that's Kohl's. Now, I do have some Kohl's, just want you to know. Get rid of that. Get rid of that. Change this back. And back to the beginning. Here we go. All right, so we're at 11 o'clock. We got 15 more minutes, and then it's going to be just answering questions. So what else do we got to look at? Nike. Let's take a quick look at Nike. Somebody was nice enough to ask me about Nike, NKE. Now, I like Nike. Look at this big drop right here. This was right around the Olympics. Big drop. Okay, here's the high, 106, 107. Here's the bottom, right around 70. Okay, up, down, sideways, down, up, down, back up again. Well, this looks like a great time to jump in. But before we do, what am I looking at? 75.25. The 75 is going for 130. So at 122, well, that's a yes. The 76, well, it's going from 60 to 78. Well, that would be a yes also. Either one of those. Then you have to weigh the pros and cons between the two. Because the 75 is a safer trade. Get a little bit less money, but it's safe. The 76, well, you're going to make over 1%, but the stock has to go up. It's not as safe. All right, anyway. Last year, 103, tops out at 107. The last 90 days. Look at this. Down, up, down, up. Awesome. Look at the up move right there. That looks like it has a lot more place to run. Or does it? Because this is the 90-day. The 90-day makes it look like, yeah, great opportunity because you have all the way up to 84. But we don't operate that way. Because we operate like, hey, what happened last week? Okay. The last 30 days. Here's your 30-day high, 77. Drops down to 70 and shoots up, 75. Okay, that's a nice little move to the upside. Well, it's got more room to run, but look at where it is. From 75.58 to 77. It's only $1.50. Is it really worth it? Because look at all the space between here and the bottom. It's closer to the top than it is to the bottom. Can it continue going up? Well, what does it normally do this time of year? Normally this time of year, this thing, oh yeah, hell no. Okay, so we're right here. All right, you might get 1 or 2 weeks out of this. Okay, so we're here. Okay. Right here is the end of the month. So you got 2 weeks. You have about 2 or 3 weeks before she starts dropping. Okay. What does the regular chart look like? Okay, can you get another 2 to 3 weeks out of this? Well, that's the 30-day chart. Look at the 90-day. Okay, the 90-day says, yeah, here's your 90-day high, 81. Here's your bottom. Could it keep going up? Yes, it could. But how does it differ? And is that okay for you? Because it always comes back to the very same questions. Number one question, does it make sense? Number two question, do I like this stock? Number three question, do I like this stock at this price? Number four, do I like this stock at this price, and am I willing to hold on to it for as long as it takes until it hits that target? All right, let's keep on going. Ooh, those are all those. All right, what other questions we got? Mike Steak. Wow. Now, here's the thing, Mike. You've asked me about 4 or 5 different questions. Every single one you asked is a no. So I'm kind of thinking you're not really here for cash flow. You're looking for capital appreciation. You want to buy something low and watch it go higher and higher and higher. Okay, you're definitely in the wrong place, brother. I don't want you wasting your time. Because NVIDIA, hell no. It's a $120 stock, number one. Number two, the book value is $1.74. Number three, Jeff Flower, hold on one second. Number three, the dividend for NVIDIA is 1 cent per share. There's no possible way NVIDIA had 20 years of increased profitability. The profits are shared with the investors. Okay, so you're getting 1 penny on a $1.74 stock, but you're paying $120 for it. NVIDIA makes no sense to me whatsoever. Yeah, it's the hot stock at the moment. Well, so wasn't Blockbuster Video. So wasn't Enron. So wasn't Netflix. So wasn't Amazon. They were all hot at one point in time. They're not anymore, especially because NVIDIA's options, well, the options are okay, but the dividends are horrible. The profitability is horrible, because I judge the profitability by how do they how often do they increase their dividends, because the dividend is a portion of the profits that they hand back to the shareholders. Okay, Jeff Flowers, where do we go to get into your class? Well, I really do. I really try not to try to sell anything while I'm here. But if someone asks, I will point it out. Okay, over on my website, The 10-Minute Trader, the very first page, right there, the landing page, that black spot right there, live trading online. Yeah, you click on that, that will take you to there. Okay, everything I have for sale is on the website, but I try not to sell anything. I'm not here to sell anything. Okay, I'm just here to share information. Okay? But, yeah, I do have shit to sell. If you want to go, that's where it is. Okay, Jeff? Okay, so let's keep on going. Thanks. All right. Val Frank, AZN. What the heck is AZN? AZN. AZN. Whoops. First, I got to put it in the right place. AZN. Interesting. Never heard of it. Oh, AstraZeneca. Cool, $70. Well, let's just see. AZN. Let's see how profitable they are. Oh, hell no. All right, let's do this again. You ready? 1993. 10 cents. 16, 10, backwards. 18, 11, backwards. 13, 12, backwards. 22, 13, backwards. 26, 14, backwards. 18, 13, backwards. 26, 13, backwards. 54, 26, backwards. 13, 26. No. Come on. Look at the numbers. 1 step forward, 2 steps back. 2 steps forward, 1 step back. No, sorry. Val, do you see the numbers? 45, 99, 47, 99, 47, 99, 50. It goes up, it goes down, it goes up, it goes down. No consistency in profitability. There's 9,845 different companies to choose from. Why the hell do you want this one? They're not consistently profitable. Why? Think about it. The profits go up, the profits go down. The profits go up, the profits go down. I question sometimes, what are people really looking for? You're looking for, most people want the same thing. They want to buy something and see it shoot through the roof. It doesn't happen that way. All right. Mike Steak, no. Okay. Don't Val, no. What's your take on XCN? Mr. Chanclas, XCN. Really? I've never heard of that one. XCN. Well, XCN, we can't find this symbol. So, I'm not quite sure. XCN, yeah. Weak. Not sure if true, but I was told the price usually goes up the week before earnings for options. Yes, sometimes they do. Depends on, okay, Andre, it depends on the whispers, because they have the whispers, they have the hearsay, they have that rumors, okay? Are they good or are they bad? Ooh, Steve wants to take a look at Verizon. No, I like Verizon. That one I get my head around. Okay, ooh, oh. Okay, here's your 30 days on Verizon. Look at this. 30 days ago, we're at 40. Jumped up to 40.50, dropped down to 37.50, and then shoot back up. Yeah. Your profit taking's getting ready to happen any day. Okay? From here, 37.50 to here, yep, there's going to be profit taking coming next. AGNC. Okay, DAFA, we already looked at ABV. ABBV, we already looked at that one today. So after we're done, you can go back and watch the recording because it is being recorded. What else we got? AMD, we already looked at that one. That one's a no. Okay, Mike Steak number 1. Every single thing you asked me so far, okay, either no dividends or it definitely looks as if you're looking for capital appreciation. You want to buy something and hold on to it so that it grows and grows and grows. Dude, you're wasting your time here. You seriously are. Now, how often do people say, hey, you're really wasting, there's other places for you to spend your time better than this? Because everything you asked me so far tells me that you're looking for capital appreciation. Everything you asked has no dividends whatsoever. AGNC. Now, I don't like AGNC, and I'm going to explain to you why I don't like it. AGNC. Because it used to be on my list. Okay? Here's why I don't like AGNC. You see the dividends, the premiums? Markets are going down. Should be worried? No, not at all. Okay? 0, 0, 0, 0. So if you're at the money, you get a nice rate of return. 1 strike out of the money, well, it's crappy. But 2 strikes out of the money, it's 0. And everything under 2 is 0. Okay, so if you're wrong, and it does happen, okay, you're not getting any rate of return. There are other stocks that have better performance records than AGNC. I used to trade it. Then I found myself with the stock go down, I'm not getting any returns whatsoever. So it just didn't make any sense. So AGNC, Energy Transfer, and there's a few others that you go 1 strike out of the money and you get nothing. And then it doesn't make it worthwhile. Okay, world you want to live in, girl. Pfizer, PFE. Interesting. Let's take a gander. Here's the high. Here's the low. Here's where it was. Here's what it is. Look at this. Sideways down. Up, down, up. Okay. Interesting. Let's keep on looking. 2686. All right. So 2683. Wait a second. The last trade was 26.86. The current is 26.83. Looks like the stock price is coming down. So we're looking at the 27s. 26 to 27, not quite 1%. And with the market maker doing this, 26.86 the last trade, the bid 26.80, the ask 26.83, they are both lower than the last price. That usually tells you the market maker is going to push it down tomorrow. So Pfizer, no, just doesn't look right. All right, 11:17, we're done looking at stocks. Now we're just going to answer questions. All right, so here we go. AMD, no dividends, no thank you. Okay, Polka Wolf, Coca-Cola, we already looked at it. Okay, the numbers are off. You get like 0.2%, which is like 0.66 rather than 1. So Coca-Cola, no. KMI, we'll have to look at it tomorrow. XCN. Didn't we look at XCN a little while ago? Okay. So, Mr. Chanklis, we cannot find this symbol, XCN. Okay. Now, this is Think or Swim, which is through Charles Schwab. Now, Charles Schwab is a huge brokerage company. I think they have access to everything available. XCN, not coming up. Bicky Dillon, what's happening? Okay, Val Frank, okay, AZN, we already looked at it. AstraZeneca, no, numbers don't work. Okay, Big Taz, FNDX, what the heck is that? FNDX. Dude, that's a monthly. FNS, what was that? FNDX. I don't do monthlies, the numbers just don't work. NVIDIA, Mike Steak. Okay, Mike Steak, yeah, I told you before, dude. NVIDIA, hell no. You're paying for, what are you getting when you get NVIDIA? The book value on NVIDIA is $1.47, $1.74, sorry. $1.74 is the book value. So if the Supreme Court comes up tomorrow and says, NVIDIA, you've got to liquidate and pay off your investors, you're getting $1.74 per share. That's all you're getting. That's all it's worth. The book value. What do they own? What do they owe? The difference before on the spreadsheet. Okay, check the bottom line. $1.74 per share. And the dividend for NVIDIA is 1 penny. Big Taz, Yum. Ooh, Yum Brands, good company. But we're past time for that. We're just looking at doing answers. Amazon is known for the strategy. Thank you. Can you look up Procter & Gamble? Ooh, I love Procter & Gamble. But not tonight. We're past that time. Eric, we already looked at Nike. Scott, Apple's awesome. What do I think about Energy Transfer? Hell no. Okay, Taku, we just looked at Nike not even like 3 or 4 minutes ago. Eric, same thing for you. We just looked at Nike a little while ago. Thanks for answering my question. You're welcome. LFW. Mike, never heard of it. LFW. Can't find that symbol either. ORC. What the heck is ORC? No. Monthly. See? February, March, April, July. Those are months. Monthly doesn't work. Only weekly options with 2 decades of increased profitability. Oh, IFW. IFW. Can't find that symbol either. IWF. IWF. That's a monthly. Okay? Monthly. No. Eric. Oh, L-Rock. Hey, James, how are you doing? I recently bought Ryan at around 11.12. Is there a way to undo the... I have no idea what that means. I have no idea why you'd buy Ryan. Ooh, OKLO. Yeah. No. Eric, we already looked at Nike. Ben, James, how do you manage to not get gray hair. Dude, I got plenty of gray hair. Okay? I'm only 61. Eager to learn. Keith, thank you. Tell us about Tellus. Tellus. Ooh, I have no idea who that is. Now, Rob, Tellus. Now, Rob, I've been doing this for about 20 years. My main focus are companies that have consistently increased their dividends to their shareholders, because a dividend is a portion of the profits. And if they're giving a portion of the profits back to the investors, and that increases consistently, well, their profits have to increase if the dividends increase. If the profits increase, well, the dividends got to increase. They go hand in hand. So if the dividends aren't increasing, that means the profits aren't increasing. And those are the only stocks I do, are dividend stocks, for the most part. Every once in a while, Warren Buffett will throw one in there and I'll trade that. Thank you, Rob. Good to know. You're welcome. There's just something about all this that I have to know. Thirsty? I have no idea what that means. Okay, I drink this for my throat because I'm not used to talking so much. Usually, before I retired, I was a CEO of a manufacturing company. I didn't do a lot of talking. Here, it's like talking for 3 or 4 hours straight. Luke, TSSI, never heard of it. All right, Philip Johnson, how are you today? You got 10 grand. What should you do with it? Let's throw a pizza party, dude. We're partying at Phil's house. Yay! Phil, I can't tell you what to do. I don't know anything about you. However, what I do offer, see if I get this right, no strings attached. I'm not trying to sell you anything. Drop me your phone number. I will give you a call. We'll chat. Because what I do is not right for everyone. It's slow, it's boring, it's monotonous, it's tedious, it's the same thing over and over and over. And it's the same companies over and over and over again. Well, why? Well, because the same companies are consistently profitable year after year after year. To me, that only makes sense. And consistently repeating, well, because week 1 of the first quarter looks the exact same as week 1 of the second quarter. And it looks the exact same as week 1 of the third quarter and the fourth quarter. It's the same stocks every 90 days. There's 13 weeks. Week 1 is the same as week 1, which is the same as week 1 in the fourth quarter. Okay. It's repeating the same thing over and over again. So anywhere between 10 and 30,000 people will come through, because I got 7 channels, okay? TikTok, Facebook, Instagram, 2 TikToks, 2 YouTube channels, all that weird stuff. And I think Rumble and Twitch and a bunch of other ones. So I get a lot of people coming through here. And I tell everyone, same thing. If you really want to chat, now be prepared to get emails and text messages from people who saying they're me, but really aren't. Because there's a lot of scammers pretending to be me. Just a part of the business. If you really want to talk to me, you really want an opinion, you really want some advice, give me a call. Drop your number down. I will call you. All right, let's keep on going. So yeah, Philip, if you're interested, send me your number. I'll call you. Okay, Rob, you know more than us. Okay. Ooh, CTAS, Shane, that's a good company. Brewster, UPS, another good company. Okay, now Luke, when you say TSSI is a big sleeper, okay, I have certain requirements. Does it have weekly options? Have they been consistently profitable for at least 20 years, 2 decades? Okay, I've never heard of TSSI. Now, usually, if I haven't heard of something, it's going to be a no. Monthly options? No. The numbers just don't work. Okay, now, I didn't go to college, Luke. I admit that freely. I am not as educated as some of you people. But I don't need to be, because I know with monthly options, I can only do it 12 times a year. Weekly options, I can do it 52 times a year. And I do know, even though I'm not college educated, 52 is higher than 12. Monthlies just don't work. It's going to be a no. Sorry. Hunting accessories. What's your thoughts on ATAI? No. Wasn't that quick? Ooh, Alice. Okay, Alice. I'm going to tell you something about Target, TGT. Number one, they're over 100 years old. That's great. They are a dividend king, which means they've increased their dividends for more than 5 decades. Great company. However, you got to be very, very careful with Target. They have what's called black swanitis, which means a whole bunch of black swans. Not this one. Let's get out of that one. Let's go right there. Here's the chart for Target. See this right here? This big, huge gap? Huge gap. Another one right here. Another one right here. And lo and behold, there's another one right here. Okay? Now, a black swan is where they have a higher than average gap up or gap down. Target, dividend, earnings call. Dividend, earnings call. Dividend, earnings call. Dividend, earnings call. Every single time they have an earnings call, there's a big, huge gap up or a gap down. You've got a 50-50 shot. They have, what do you call it? The best way to play this one is the day before the earnings. You buy a call and you buy a put at the money. One of them's going to shoot up. The other one's going to be worthless. But you better hope that the one that shoots up enough to cover the second one that loses. Because every single time, earnings, big, huge gap up or big, huge gap down. It's called a black swan because it doesn't happen all the time. Okay, he'll bow for ICANN. I have no idea what that means, Andrea, but okay. Piranha, what's your opinion of AGNC? Now, AGNC, I used to trade it, but nowadays the option values aren't worth it. Take a good look. If you're right, you're right. If you're wrong, you're wrong. Okay? So 1 or 2 strikes out of the money, you get nothing. Okay? It's not like Dell or Intel or some other companies. You can be wrong, but the numbers are so good, it's okay to be wrong because you get nice numbers out of it. Okay, AGNC and Energy Transfer are 2 of them at the top of my head. I used to trade them. I just don't do it anymore. Not Chris Manzi. Ford. I love Ford, but not this week. ATIA. Okay, hunting accessories. I have no idea who that is. Let's put the glasses back on so I can see. ATIA. Can't find that symbol. That means it's a no. ATAI. Oh, ATAI. ATAI. Yeah, no, dude. Sorry. Several reasons. Number one, you can't possibly, seriously, you cannot possibly have 20 years of increased dividends on a stock that's $1.45. I don't buy it. Sorry. Okay. Also, monthly. Nope. Just don't work. Ooh, Mark, Oracle. Like Oracle. We'll have to take a look at it tomorrow. Yvonne Moore, Coca-Cola. Now, I love Coca-Cola, but the numbers just don't work. Not Chris. You selling calls or what? Yes, I am. Can you do Zim? We'll have to do it tomorrow. C. Keeley, Cummings, CMI, has a 2% yield and growth potential. Thoughts? CMI. Doesn't sound familiar. Okay. Monthly options. Okay, you like it for one reason. I don't like it for 2 reasons. Orlando, we already looked at Verizon. Sorry. Okay. So, who said that one? Okay. C. Keeley. Monthly? No. I don't do monthlies. The numbers just don't work. Okay, not Chris. We'll have to take a look at that tomorrow. Adam, we already looked at USB. I see you got some glasses. All right, Rich. Paying attention. Way to go. What do I think of SoFi? Chasing 10. SoFi, no dividends, no thank you. Orlando, I really don't remember. 100% honest, I don't remember if Verizon was a yes or a no. Okay? What's my opinion on AGNC Piranha? No. That's my opinion. Okay? The premiums. The premiums on the stock options. If you're right, you get a decent amount. If you're wrong, you get nothing. There are too many other companies that have a better rate of return. Just my opinion. Tom Lee, Misty. No dividends, no thank you. Were you a former broker? No. I was a former idiot who made a lot of stupid mistakes and didn't know when to quit. So I just kept on doing it and doing it and doing it and doing it until I finally got it right. Who said that one? Colton Shilley, our former broker. No. See, funny thing is, it's like I had a manufacturing company and I made so much money I didn't know what to do with it. I know it's a sad story. Okay? Texas Steve. So I would invest my money. I tried a whole bunch of things, but when it came to stocks, I would invest my money and I keep losing until I finally, it's like I found something that worked. It wasn't until my 9-year-old daughter jumped on my lap and said, Daddy, can you teach me what you're doing? So I've been doing that strategy ever since. Can you do land? Yes, we'll have to do it tomorrow because it will pass 11:30. CMPS, never heard of it. CTAS, Shane, Paul, we'll have to take a look at it tomorrow. I'm here every single night. Okay? Every night except for Friday nights and Saturday nights. Last year, it was every single night. 2.5 hours every single night last year. This year, I'm taking 2 nights off, Friday and Saturday. The market's closed Saturday and Sunday anyway, so why look at it Friday and Saturday? Love the shirt. Great color. Thank you, Alex. Holy cow, I still got 85 questions to go? Holy shit. CLM, no. The numbers just don't work. OXLC doesn't pay dividend. Well, that's going to be a no. Why wouldn't last a second in me? Well, alrighty then. Sound LIA, no. I haven't been around. Becca, see you tomorrow. Check on HMX. Very cheap stock and great dividend stock. Fluctuates a lot. Okay, Sam, if it doesn't have 20 years of consistently increasing dividend, it's going to be a no. Tyrese, nice to see you, brother. Okay, we West Coast a lot. Yeah. Soundhound AI, yep, hasn't been around for 20 years. It's a no. Simple, right? Hasn't been around for 20 years. It's a no. Okay. I had Zim, but they had to take out international fees, taxes. Okay. One secret to success. High trend. I have no idea what that means. But okay. You shared the live. Thank you for that. Great job. Did a live 90 minutes. Yay. Piranha. Jurassic doesn't see 21% dividends for OXLC. Is that the correct ticker? What the heck is OXLC? OXLC. Dude, it has no options at all. Okay? OXLC. No options. No. Why? OXLC. Oxford Lane Capital. Okay, but dude, look. No options. How can you do a covered call for a stock that has no options? 86. Dude, it's about time you get here. You should have seen all the trolls we had earlier. Happy person. If this was guaranteed 1% a week, then everyone would do it. Okay, happy person, I seriously got to disagree with you. Okay? So you haven't interacted with the public that much, I can tell. Because we humans are a fickle bunch. You can give us something, and we're going to complain, bitch, and moan about it. I can tell you there's gold under the X, And you'll probably go to the X and start looking at it and say, well, can you dig it up for me? It doesn't work that way. I'm sharing something that works. It's been working for me for the past 15 years. Why doesn't everyone do it? Everyone doesn't know about it. And those that do know about it don't want to do it because it's too much of an effort. Okay? So I've been here every single night for the past year. Every single night. Since January 2024. Every single night. I missed 6 days last year. 6. 365. 365. 365 days. I missed 6. Okay? That means 359 days. 359 days every single day for 3 hours. Standing here just talking to myself. Answering questions. Okay? So yeah, it does work. 1% a week does work. But most people don't want to do it because they think it's too difficult. Because here's the thing, happy person. What I'm showing you, I created for my 9-year-old daughter back in 2008. She got up on my lap and said, Daddy, what are you doing? Can you teach me? So to teach a 9-year-old how to do it, it had to be simple. Safe, predictable, consistent, and no way for her to lose. That's the 5 criteria. 5. 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and make sure the numbers work. It sounds simple. It is. It takes less than 10 or 15 minutes every day to make 50% per year. But most people are too damn lazy to do it. They come up with excuses. Well, I can't do that. I got to work. I can't do that. This. I've heard a lot of them. Didn't hear them all because I'm sure there's ones I haven't heard. But here's the thing. It is what it is. I'm giving you the information. What you do with it is totally up to you. You either like it and do it, or you don't. It's that simple. What about getting exercise at a huge loss? Well, see, Keely, you definitely were not paying attention. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Okay? You're missing rule number 2. And Keely, you've only been here. This is your first time here. I'm really good with names. Really, I have a great memory. But this is like your first time here. Keep coming back. You will see how it works. Okay? Okay, you can go and see some of my videos. I got like 900 videos on YouTube, and I got about 900 episodes on podcasts. So I've been doing it for a while. So yeah, it works nicely. Most people just don't want to do it. Jeff, Piranha Dividend is 108 yielding 21%. Okay, Jeff, I'm kind of curious. 21%? I doubt it, but every contract is worth 100. Not quite sure what you mean by that. Piranha price is just $5 per share. Okay. What were we talking about? You guys are talking about something. I have no idea what you guys are talking about. Good evening from Alabama, Gulf Coast. Yay! Roll Tide, brother. I have no idea what that means. How is Amazon? Okay, Usman Khalid. Amazon does not have dividends. They are a no. Which company was that, by the way? That was OXLC. Probably not the one you're looking for. Uh-oh. I missed some questions. Wow, I have a lot of questions to keep going off. Roll Tide. Which company was that? Sparky. Okay, Blue Heron Landscaping. Hey, you're back again. Cool. I set up my account, but I haven't funded it yet. How much do you recommend? Okay, Blue Heron, dude, I really cannot tell you. Okay? No, you've been here a couple of times. You've asked some good questions. Your best bet, send down your phone number. I will give you a call. Okay? Dr. Rob knows. Yes, I have no idea what that means. It's cheap. I have no idea what that means. Why don't you like tech stocks? They have weeklies. Dr. Rob, here's the thing. Love tech stocks. If everything is correct. Now, what do I mean by that? Well, what I mean is, number one, never buy something you don't understand. If I don't understand it, I don't know what they do, it's going to be a no automatically. Okay, that's number one. Number two, never sell a loss. That's easy. Number three, consistency of profitability. Well, you haven't given me a stock yet that has been proven worthy of consistent profitability. What do I mean by that? Well, if they have a dividend, if the profits are continuously increasing, well, the dividends increase also. It's just the way that works. Consistently profitable, you pay more taxes. Consistently profitable, you pay higher dividends. It's just the way it works. No dividends, no thank you. No options, no thank you. It's not that complicated. Okay? So certain companies fit and certain companies don't. What are your top favorites? Well, that'd be Macy's, Kohl's, Ford, Nordstrom's, Riley, what was the other one? Riot, MPW. Oh, no dividends. There you go, Doc. Why aren't you the most successful fund manager in the world? Well, here's the thing. I have no desire years ago to do that. Okay, I just retired in 2023. Okay, so I've only been doing this for a year. Okay? Yeah, well, Jerry, why do you like Riot when they have not been around and have no options? No, they have options. They have no dividends. But here's the thing. Now, I invest in companies that are consistently profitable. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then Warren Buffett's list. So if something is good enough for Warren Buffett, well, then I will buy it. And I will invest in it. So 98% of everything I buy is a dividend-paying stock. Every once in a while, there are some that we do make exceptions for. And those are usually coming from either Warren Buffett or someone else, such as Warren Buffett. Someone who has been trading for a long time and is very good at it. Okay? So, yeah, that's why I trade Riot. That's Uncle Park. You got crushed today? Not at all. I made a nice amount of money today. Macy's looking good. Well, for me it is. Thoughts on NVIDIA? Hell no, G. Where do I get that screen? Now, I'm assuming you mean the, what do you call it? The trading platform. Yeah, that's with, what do you call it? Charles Schwab. Okay. What commission do you pay on an option trade? Don't know, don't care. General Motors, am new here. Oh, good morning. Okay, well, how are you? I'm fine. Cowie, hi. Please, am using an MT5 on a demo account. Now trying something. Okay. Why do you think NASDAQ went crazy today? Don't know, and I don't know how to answer that question, Michael. Okay, I look for certain things. I don't pay attention to all the noise. Is that Kohl's department store? Yes, it is. Graph, what's happening? All right, how about VIO? Never heard of it. I belong to your group, and I know you do other strategies, but how long did it take you to figure it out? Okay, Laurie. Good evening, Laurie. How are you? Well, see, Laurie, I've been trading since the late 1990s. Okay? Yes, I did take a lot of courses. Yes, I did pay a lot of money to read and study and do some of these trading strategies. Okay? But I do trade other strategies, but here at night I only teach one. Okay, I got to draw the line somewhere. I'm a nice guy, but I got to draw the line. So I don't teach everything I know. Piranha, what's your opinion on AGNC? 14.88% dividend. No, I don't like it. Now, Piranha, I already told you why I don't like AGNC. Same reason why I don't like Energy Transfer. Okay, when you take a look at the premiums, okay, this right here is AT&T. At the money, you get 67 cents. That's a nice premium. Okay, 1 strikeout, 27. 2 strikes out, 9. 3 strikes out, 2. 4 strikes out, 1. Okay, with AGNC and Energy Transfer, you get a nice amount at the money. You get crappy amount at one strikeout. Two, you get nothing. Okay, so no, the premiums aren't that good. Okay, there's 9,845 other companies. If it doesn't fit and the numbers don't work, why do I want to keep looking at it? Laurie, what you wanted to pursue? I'm not quite sure what you mean by that. What's the symptoms for colds? Opposite of warms, I'm guessing. World you want to live in, girl. Thank you so much. You're welcome. I appreciate you. Thank you. Well said. Thank you. Barack, do you know anything about the company financial profile? Yes. What would you like to know? Keith Brooks, thanks for doing this tonight, bud. You're welcome, Keith. Yay! Follow the creator. Okay. YOLO. Creator. Barack. You know when companies reinvest in itself, it can reduce dividends. That you're hilarious. Well, Barack, well, thank you for that. Now, if the company's reducing their dividends, okay, they don't usually reduce their dividends unless they're using that money to either buy back stocks or for a good reason. So I'm only looking at the companies that continuously take the money and give it back to the investors. Like I said earlier, there's 9,845 different companies. Why would I pick one that doesn't fit what I'm looking for? The way you trade also works for single calls? No. Because see, if you're talking about single calls, you're talking about buying the call and waiting for it to go up. What you're missing there is the time value and time decay. See, if I'm buying a stock and it goes absolutely nowhere, okay, I'm still making money. If you buy the call and the stock goes absolutely nowhere, you're losing because of time decay or theta decay. UNP, Union Pacific. Okay, Renee, I like the company. However, we ran out of time because I'm usually done at 11:30, but I did say I will answer every single question, so that's all I'm doing now is just answering questions. Hey, Rigged Fight. Mara, love it. Archer Aviation. No, it hasn't been around long enough. Big Earn. EL, Estee Lauder. Ooh, I like that one. We'll take a look at it tomorrow. ACHR. Never heard of it, Melinda. CW. Thanks. Catch you later. Well, we'll see you later. How long do you hold? As short as profitable. The longest, Sonny, the longest I've ever held anything is 9 months. And I didn't do it because I wanted to. What is the difference between weekly and monthly? Weekly, you can do it every week. Monthly, you can do it once a month. Other than that, there's really no difference. Okay? But trying to figure out where a stock is going to be 30 days from now is not as easy as it is 5 days from now. Okay? I look at weeklies because it's easier to figure out where it's going to be in 5 days than where it's going to be in 30 days. Okay. S. Hammer, cycle. No idea what that means. Dion Byers, NASDAQ sell-off in 5 minutes. Alrighty. Flipper, 56, exactly. Alice, do you? James, that's very helpful. Thank you. Do you have D's? Need your opinion. No, I do not have D's. Flipper, James, where is your glasses? I saw you wearing them. They're right here. I'm reading questions now. So I only need the glasses while I'm looking at the chart because the chart's over there. Ooh, Ange, Harley Davidson, like it. Corey Brown, OKLO, no. CEG, no. SIG, no. Interesting to you? Not at all. Oh, dang. What was the consensus on Verizon? I don't remember because I did Verizon earlier, about 2.5 hours ago. What about Google? Latina Hunter, hell no. Now, the reason why I'm saying no to Google, okay, they've been around for a while, but they've only started paying dividends in the last 2 years. They got another 18 years before I even started looking at them. Flipper, AEP, about to be a power source in Abilene for AI. Cool. Latina Hunter, SCHD, hell no. Okay? If you seriously, Latina Hunter, take a look at the dividends on SCHD. Take a look at how long have they been paying, how long have they been in business? How long have they been paying dividends? How consistently are they at increasing their profits? Okay? SCHD, no. Estee Lauder, Big Earn, I like it, but not now. You must be enjoying your weekend off. I am. A strange thing is, I get up at I'm staring at the clock at 8:30, 9 o'clock, 8:30, 8:45 on a Friday night. I say, I got to get, no, I don't. Because I'm so used to doing it every night. Okay. C3AI, nope. Arco, nope. Listening while you work. Want to learn and understand. Glory, just keep on coming back. Oh, we're almost done. I hope she does well with a dad like you. She's very fortunate. Latina, yeah, she did the girly thing. Okay, as soon as she turned 13, she stopped trading. She stopped doing everything, and she turned into something. It's like, I have no idea who the hell she was anymore. And you have 14 books. Yep. Book number 14, I still haven't got it up online yet. I think he said Verizon would probably have a profit-taking soon. It's not a good time. Oh, thank you, Alice. I don't remember what it was. Is YMAX good? Okay, Gavin, take a look at the consistency of profitability. Take a look at the dividends. How consistently do they increase? Victor, what do I think of XRP, Trump, or Doge? Well, XRP's a no. Trump, he can... I'd rather keep my comments on him. And Doge, are we talking about the Doge coin or the Department of Governmental Efficiency? Migas, how are you? Thoughts on trend lines? Well, trend lines are pretty cool, but depending on what you're using them for. Okay, a big buck Wall Street 80s, or 805. Nike, we already did Nike earlier. Trent, it's good. How are you today? That's it. That is the last question of the evening. So, you guys have a great night, and I will see you again tomorrow. Done. Done over there, and done over here. Catch you guys later, and now the end is here, and so I face the final curtain. My friends, I'll say it clear. I'll state my case for which I'm